What's up everybody, and welcome to a new video. I'm your host, Diogenes. In today's video, I will give you guys some examples and some definitions of some concepts you asked me to cover. Number 1, the SNDR. The SNDR is the supply and demand zone, responsible of break-in structure, BOS. On the time frame you are trading, it can be seen as a valid zone inside your zone, an order block, a candle or more, or a fractal. Example, we have this bearish zone, this M1 zone, and we broke under it with this candle. The SNDR here is nothing but the last buy-in before we closed under the zone. That's why we call it responsible. In this case, the SNDR is an OB. Why? Because this zone was never validated. We needed to close above this down candle to be a valid zone. So this was an OB SNDR. Another example, we had this bullish M1 zone and we closed above it with this candle. So the last sell-in before we closed above this zone was this fractal. So this is a fractal example of the SNDR. Another example, we have this bearish M1 zone and we closed under it here. So the last buy-in before we closed under it was this zone. I called it a zone because this zone was valid and it was a zone under this zone. So this was a mini zone SNDR type because we closed above this candle and validated the low and closed under this candle to validate the high. So this was a valid zone. The SNDR is often at the 30% and is often responsible for the accumulation or the first tap. The 50% of the SNDR often give a good scalp when it's made of a valid zone. Examples. So we had this bullish zone and we had this fractal SNDR, and look at how this SNDR, although it got wicked, but it gave the first tap in this zone. So the 50% of this zone is still not mitigated. The SNDR is often wicked before giving the first scalp. That's why I consider it personally low probability, especially if it's a candle SNDR or a fractal SNDR. A valid mini SNDR zone hold better. So this price action was made before I was typing my definitions, and surprise, surprise, the fractal SNDR did get wicked first before they gave the first scalp. Here, in the second example, the OB SNDR didn't hold at all, but we closed above and we used it to flip back bullish. In the example of the valid zone SNDR, look at how price respected it and went back bearish again. Sometimes, when higher time frame bias is supporting a narrative, the close under or above a SNDR can be an early signal of a flip. Example, on the 15-minute, we had this bullish zone and we also have this bullish valid SNDR. So, as I told you before, a trade in its 50% is high probability. So, when price touched the 50%, we drop to M1. So number 1, we got the 1-to-1 for this 15-minute zone, but we had this last bearish zone and we had its SNDR. So for me, since higher time frame is indicating possible bullishness, the moment we close above this SNDR, price will use it to accumulate more long positions and continue with the higher time frame narrative. This is what DTFX guys call advanced market structure, which is a concept that I will cover more later. Number 2, origin of the move. The move origin, or often only called origin, is the first move or zone created by price before break-in structure. Example, we have this H1 zone, so the first zone that's created before validating the zone is our origin of the move. Sometimes the origin and the SNDR are the same zone. Sometimes price creates an origin of the move and flies with one huge candle to validate that zone. So in that time, the origin and the SNDR are the same, and you will have to expect huge reactions once price comes back to mitigate it. Reactions from origins are often strong, especially when price creates inducements first at the SNDR as the first tap or at the 50% of the zone. Example, we have again our H1 zone. Price created the first tap in this imbalance, 50%. So this was only inducement for price to come back to the origin of the move, makes a fake MSS. So a lot of guys will short and get trapped here short, but price only came back to the origin to mitigate this zone and then fly back again. The origin is often located at the 70% of the zone and is the last line of defense for that very zone. So, example, look at how price started at the 70% of this zone, which was also somehow very close to the 50% of the origin. When you see that a zone is complex, and by complex I mean that it has a visible SNDR and a visible origin, I want you to be patient because price will 80% of times seek the origin of the move. Back to our example, I don't want you guys to be trapped in this 50% imbalance tap because it was only a scalp. Again, we had this fractal SNDR. I don't want you to be trapped in this reaction. It gives the one-to-one, okay, but don't be greedy because you see a clear origin of the move. So you have to be patient because price will likely mitigate it. Okay, that's all for today's video. I hope you guys have a safe weekend. Good luck and good trading. Ciao, ciao.